Hello everybody and welcome to a new video. In today's video I will be covering everything in regards to the breaker block. With the help of this video you will understand what a breaker block is and how to use them in your own trading. But for now, let's hop right into the video. Let's start off with covering the bearish breaker block. As you can see on your screen, we have the following schematic, which is identified with creating a low, a high, a higher low with a higher high. After the higher high was created, we can see that we displaced down and we broke structure. Now this means that this series of downwards closing candles is our bearish breaker block. We can see that we retraced higher into the bearish breaker and we got an expansion move lower. But why is this the bearish breaker in this case? Well, as you can see in the schematic, we had a sequence of creating a low, a high, a higher low, followed up with a higher high. So in this sequence, price was clearly bullish. So when price is bullish and we are retracing into downwards closing candles, those downwards closing candles should support prices higher, functioning as a bullish order block. But what did price do? The bullish order block failed to hold, we displaced lower, and once we are retracing back into those downwards closing candles, they are now not functioning as support, but they will act as resistance, pushing prices lower. Next up, we are covering the bullish breaker block. And as you can see in the schematic, it is actually an inverted scenario of the bearish breaker block. We have a sequence right over here of creating a high, a lower high, followed up with a lower low. After the lower low was created, we can see that we displaced higher and we broke structure. This means that this series of upwards closing candles should now function as our bullish breaker block. After the new high was created, we retraced into the bullish breaker block and we got an expansion move higher. But again, why is this our bullish breaker block? Well, when you take a look at the schematic, you can see that we had a sequence of creating a high, a low, a lower high, and a lower low. The trend was clearly bearish. So in a bearish trend, what should price do? Well, once we retrace into upwards closing candles, they should function as resistance in the form of a bearish order block. But as you can see in the schematic, the bearish order block failed to hold price down. We displaced higher, and once we retrace back into those upwards closing candles, they should now function as support, pushing prices higher. But what should you be doing with taking a position with the help of the breaker block? Well, I would suggest you to do the following. When I am trading the breaker block, I like to use the body of the breaker itself. So this will say that, for example, when I'm bearish, when price trades back into the breaker, I would like to use the closure of the body to get into a short position. And it is the same thing when you're using a bullish breaker block. So when price trades back into the bullish breaker block itself, I would like to use the closure of the body's candle to get into a position. It is important to add that you want to see sensitivity around the mean threshold of the breaker block. So for example, when we are bullish and price trades into the breaker block itself, you want to see price willing to move away higher once mean threshold is reached. Once we see body closes underneath the mean threshold of the breaker block itself, the chances of the breaker block failing are going to be significantly higher. Now that we went over the theory, let's dive into some examples to get an even clearer view about the breaker block. So let's start off with covering the bullish breaker block. Well, as you can see, we have created a low over here, followed up with a new high. And after that high was created, we have created a new lower low. Let's see what price is going to do next. Well, as you can see, we have created a new higher high, and this means that this series of upwards closing candles should now function as our bullish breaker block. Let's see how it goes. As you can see, we got the dip back into the bullish breaker block and we got the expansion move higher. So next up, let's cover the bearish breaker block. As you can see, we have created a high over here with a low over here. After this low was created, we have created a new higher high. So let's see what price is going to do next. As you can see, we displaced lower, we even created an FEG, and this downwards closing candle should now function as our bearish breaker block. We traded into it, so let's see if we get the expansion lower. And as you can see, after we traded back into the bearish breaker block, we got ourselves into the liquidity. In this last example, we will be covering another example of the bearish breaker block. As you can see, we have created a high over here, followed up with a new low, and after that low was created, we have created a new higher high. Let's see what price is going to do next. After the higher high was created, we can see that we displaced down. Now this means that this series of downwards closing candles should now function as our bearish order block. Let's see what it is going to do. As you can see, we got the retracement back into the bearish order block and we got the expansion move lower. And that brings us to the end of the video. If you have any ideas about topics you want to see covered next, make sure to leave them in the comments below and I will take them into consideration. But for now, if you like the content, I will highly appreciate if you hit that like button, and if you want to see more, make sure to subscribe. But for now, have a nice rest of your day.